Many people spend years collecting digital assets without ever thinking about how to protect them. In this video, we're going to show you how to safely include your cryptocurrency, like Bitcoin and Ethereum, and other digital assets, like NFTs and ordinals, into your California Living Trust. For purposes of our conversation, we're going to refer to all of these items as digital assets. Before we jump into the conversation, let's be clear. This video does not provide legal, financial, or investment advice. Always do your own due diligence and consult with an experienced financial tax expert and professional in your state, region, or country if you have questions. Okay, back to our conversation. The challenge with these digital assets is that if and when something happens to you, your loved ones can't simply walk into a bank and ask for your passphrase. Without a plan, everything you built can vanish forever. If you don't prepare correctly, your trustees, beneficiaries, and family members may not have access to these assets. In fact, they may not know your digital assets even exist. So, if you live in California, your digital assets deserve the same protection as your home, your bank accounts, and everything else you've worked for. That means bringing them under the same roof as your Revocable Living Trust. Let's talk about how to do that safely, smartly, and legally. So, why do digital assets belong in your California estate plan? Well, the answer is simple. California law recognizes digital assets as property. That means they can and should be included in your estate plan. The reason is simple. Probate courts can't access your crypto. The blockchain doesn't care about your death certificate. If you don't make specific arrangements, no one, not your spouse, not your kids, not your executor, can get in. A properly written California Revocable Living Trust keeps your digital assets private, protects them from probate, and gives your successor trustee the legal authority to access, manage, and distribute them according to your wishes. A pour-over will backs it up, catching any asset you forgot to move into the trust and directing it back where it belongs. The first step is to know exactly where your digital assets live. Before you can include digital assets in your plan, you need to know how and where they're stored. That determines how you handle them legally. Let's start with hosted wallets like Coinbase and Gemini. These are custodial platforms. They hold your private keys and show account ownership through your login credentials. Adding these to your trust is straightforward. You update your account title. Coinbase, for example, allows trust accounts. You'll provide a copy of your trust certification and update ownership to the name of your Revocable Living Trust. Next, we have self-custody wallets to deal with. We're talking hard wallets, also called cold wallets, like Ledger and Trezor. These wallets put you in full control. You hold the private keys. This means there's no institution to retitle your account. In this case, you document your ownership by listing the wallet and its general contents on your trust asset schedule or a digital asset memorandum, but never list your private key or seed phrase in the trust itself. Those belong somewhere else. We'll get to that next. And then we have digital assets like NFTs and other digital collectibles. NFTs, ordinals, and tokenized assets function the same way as crypto. They live on a blockchain. If they're held in a hosted platform, you can title them in the trust through that service. If they're in a self-custody wallet, you follow the same rules. Describe them generally in your trust, but protect access information separately. The next thing to take into consideration is, how can you give access to these digital assets without exposing them to being stolen, lost, misplaced, or simply forgotten? The biggest mistake people make is mixing their access information like seed phrases, passphrases, PINs, recovery codes with their estate documents. Never do this. These documents often pass through multiple hands: notaries, attorneys, paralegals, and sometimes the court. You want your trust to confirm ownership, not give away the keys to the vault. Here's a better plan. Create a separate digital asset access memorandum. This private record lists your wallets, exchanges, and accounts along with instructions on how to access them, but not the passphrases themselves. Keep that file encrypted or handwritten and stored offline. Next, consider using a secure password manager or encrypted vault. You can use a service like 1Password or even a hardware-based encrypted drive to store passphrases and seed words. Give your successor trustee or executor written instructions, held in a sealed envelope or digital vault, about how to access that one master account. Last, add your successor trustee to the vault. You can designate your successor trustee or digital executor to gain access only when needed. This avoids accidental sharing while you're alive and ensures smooth transition when you're gone. Now you must make sure to document everything in your trust and estate plan. Your California Revocable Living Trust should specifically authorize your trustee to access, control and manage digital assets under the California Uniform Fiduciary Access to Digital Assets Act. This catch-all clause gives your trustee the legal right to request or manage online accounts and crypto wallets. We'll talk more about this Digital Assets Act in another video, and we'll share a link in the description to this video. Your pour-over will should include a similar catch-all clause to ensure any digital assets you forgot to transfer flow back into your trust upon death. Your durable power of attorney should also include digital asset authority so your chosen agent can handle crypto or online property during your incapacity. Next, make sure to keep your records up to date. Digital assets change constantly. We're talking new digital wallets, new chains, new rules. Update your memorandum anytime you buy, sell, or move holdings. If you switch from Coinbase to a cold wallet, update your list. If you create a new NFT collection, note where it's stored. Make sure to keep a clear inventory that your trustee can follow. This doesn't just protect your wealth, it protects your family from confusion and loss. Without that information, your crypto can become permanently inaccessible, effectively destroyed. If you have substantial digital assets, make sure to coordinate all of these moves with your trusted tax advisor. Why do we say this? Because for most purposes, cryptocurrency is treated as property for federal and California tax purposes. That means capital gains apply when assets are sold or exchanged. Within your trust, the tax treatment doesn't change. You still report gains and losses personally while you're alive. After death, your beneficiaries receive a step-up in basis, just like with traditional assets, which can reduce or eliminate capital gains on inherited crypto. The law is constantly changing around these issues, so once again, please check with your tax expert with questions. However, transferring crypto between wallets even inside your trust must be done carefully. Moving from your personal wallet to a trust-titled wallet may or may not be a taxable event if you're the grantor of a revocable trust, and all of your records should clearly show continuity of ownership. In any case, consult with a tax expert if digital assets are a substantial part of your estate. At this point, we'd like to remind everyone that when it comes to including digital assets in your California estate plan and then transferring them to your beneficiaries when the time comes, it all comes down to documentation, communication, and education. Don't keep your plan a secret. Tell your successor trustee that digital assets exist. Explain the basics, what they are, how they're stored, and how to access them. You don't need to give details now, but you should make sure they know where to find your instructions when the time comes. If your trustee isn't tech-savvy, consider naming a digital co-trustee or digital asset advisor, someone who understands the technology and can assist your successor trustee with management and liquidation when needed. Here are a few final thoughts. Cryptocurrency and the other digital assets, for good or bad, are part of modern wealth. Your California Revocable Living Trust should reflect that reality. Treat these assets with the same seriousness as your home, investments, or business. Keep access separate, stay organized, and update regularly. When you do this right, you preserve not just your financial value but the vision behind it, the innovation, curiosity, and independence that led you to invest in digital assets in the first place. That's what real estate planning looks like in the digital age, protecting what matters most, online and off, so your legacy keeps moving forward. If you found value in this video, please drop us a like, subscribe, and share with members of your family and friends who might benefit from this information. Thanks for your time, and never stop making each day your masterpiece.